What's going on, guys? Welcome back to another case study. Today we'll be covering trades I took on both gold. Yes, sorry, I'm just trying to remember gold and NOS. All right, so we'll start off here on NOS. Very, very simple stuff here. Okay, I don't want to overcomplicate anything, but very, very clean. I saw. Okay, so today, yeah, so we're trading on Wednesday here. Honestly, even before I even get into the trade, I just wanted to talk about a couple of things. Last couple of weeks have been rough, not rough, but slow. And I had a little think today, and I believe since we just had elections, I think the lead up into elections kind of it was sloppy. The market was everywhere. There was all this uncertainty, and what happens when the market's in that state is we build that liquidity, right? And since we trade once liquidities ran and stuff like that, how are we supposed to trade when it's just building liquidity, right? So I feel like the last couple of weeks have been slow, not a lot of opportunity. But now that the elections have occurred and Trump won and stuff, maybe I do believe that we will start seeing some more opportunity going forward. Today being a very, very good example of that. But yeah, before we, okay, yeah, let's just get right into this breakdown. Okay, cool. So we had a nice sell-off in New York on Tuesday. All right, today is Wednesday, which I took the trade on. It was on CPI, or sorry, post CPI. So CPI is right here, that vertical line, 8:30 a.m. on Wednesday. Tuesday sell-off in New York. Okay, why was this important? This was important because we've grabbed all of this liquidity to the downside now. Okay, what we can anticipate if we arrive back at the highs, okay, we can anticipate and expect false reactions. And if we do, that's perfect because then we have a reason to target this. Okay, so I sent out a forecast on this right at post CPI. I believe, yeah, right after this 15-minute candle was printed. I sent a forecast saying if we respect this high we have marked off here, 9:45 in New York. So New York's high on Tuesday. If we respect it, okay, move away and leave the highs, we have a beautiful target to target. We have beautiful highs to target. Okay, you got to ask yourself, what do we need to run in order to push up here? Simple stuff. If you look right to the lows, we left these relative equal lows, this structural liquidity, all on purpose. Okay, so I want to price down here, and then you look for buys. Why? Because there's a liquidity block right here to support your entry. So we anticipate that we're going to get reactions here. And why do we expect that? It's because this is a liquidity block, and since we have taken liquidity from the left-hand side, there should not be any liquidity below this low. Okay, so that's why we grab that internal and then run off. Okay, so I'm going to play this PA along. And boom, entry down here, stop below. And the reason why I got in so low, honestly, is because, I'll even go to the 1 minute, it was an aggressive move down. Okay, so I believe once this candle closed off, but yeah, it was a big move down, quick down and quick up. So that's why I was able to get in quite low. But anywhere below this marked low here was valid for a buy. Okay, so if I just get like a blue box, grab the bottom of the liquidity block and to the liquidity right there, anywhere in this red box was a buy. Okay, and of course, things never change. Stop loss always covers that liquidity block to the left. All right, very, very simple stuff here. Honestly, this is a pitch perfect setup. And now we're simply just going to target the highs. That's it. Okay, so we run that internal, respect the liquidity block, and we want to run these engineered liquidity highs. Okay, and we run all the way back up, and boom, within the matter of 3 hours 45 minutes, which is not bad at all because this was held over New York lunch, so that's usually an hour of dead PA. 3 hours and 45 minutes to hit a nice 1 to 5. Though this is a 1 to 6 the way I drew it here, but if you guys took it maybe up here, 1 to 4, 1 to 5-ish, 1 to 6. So you had plenty of opportunity to make nice profit on this. It was super clean. Okay. You can't ask for a better setup than this, but super straightforward and clean. Okay, cool. So let's move to gold. We'll talk about entry we took on gold here. Honestly, a really, really nice entry as well. But we've been selling off heavily. Okay, you can see all these lows we're starting to run into. We've ran this, had a little reaction up. If I zoom into current PA, let's make sense of what's actually going on here. All right, so I saw yesterday in New York, we had a bullish move up, okay, running all these internal liquidity points, okay, bumping our head into here. And then we return back to the lows. Look how we respected the lows and just moved away. Okay, that does not make any sense at all. What does that tell me? We've now left liquidity down at the lows. Okay, future target. Nice and simple, straightforward. Now, in order for us to take an entry, we want to see the same thing over and over. A build up and then a run of the build up. And then, so that trap move and then a move in the other direction. So what do I see here? This high has respected this high to the left-hand side. Okay, building liquidity and moving away. Now we have a valid area we want to mark on. Look how the market hunts for that perfectly at CPI. Okay. Now to get into the refinement of my entry, the reason why I looked for a confirmation entry is because simply there was no liquidity block to the left-hand side over here. Now if we had something like this, I could have taken this short right here with my stop above, but there was not that. So we need to wait for some sort of confirmation entry. All right. So essentially what you want to be looking for all the time is you always want to be taking an entry off some sort of a liquidity block or the creation of one. So since we've run this high over here, this is essentially now creating a liquidity block. Okay, go to the 1 minute. Perfect. Very, very simple stuff. Look how we've now taken out this internal low, okay, to induce sellers. And now we have a perfect area to be taking the sell off of, okay? Just like NOS, but on the flip side, okay? We have this internal liquidity we want to take in and a liquidity block to support our entry, okay? Anything above this high is a sell, okay? We could go all the way. We could make equals, but it's still a sell, okay? As long as we stay below on the liquidity block, that setup remains valid for us, okay? So just like this, stop above. Okay, keep it simple, keep it straightforward, repetitive. Actually, we'll stay on the 1 for the entry. Okay, and just to mark on some additional confluences, look how we've taken out a high here. Price returns back into this area at the low and moves away, leaving liquidity here. Okay, not only that, but look at this as well, same thing. We get a little BOS here for retail, okay, and price retraces back over here, and over here, and moves away. So structurally speaking, we got a bunch of liquidity here, okay. However you want to draw it, you have a trend line, a channel, okay, but we have lots of liquidity at the lows. Also down here, look at this. So this whole area, all left on purpose for CPI, right? So it's built all of this liquidity Monday and Tuesday just for CPI to stab up, induce higher, and now expect that move all the way back down to run all of those lows to the downside, all right? So let's continue. So price respects the low, okay, inducing more buyers, no problem. Now we want to take that as soon as we stab into that high. And we miss it there, and then boom, we get tagged in. It comes a little bit higher, no problem at all. Remember, anything is valid below this high. Everything, okay? So don't get too, don't freak yourself out. And clean move to the downside. All right, running all of these lows. I believe we stall for a little bit. We have a pullback. And just continuation, boom, done. Honestly, so clean. So clean. But the lesson here is, I've been telling you guys these last couple weeks, okay, 3-4 weeks, whatever it is, that there's not a lot of opportunity right now. And the most important thing in times like this is capital preservation, learning how to sit on your hands. Because if you're able to just sit on your hands through all these shitty days, and then days like this come along, and then you smash these trades, right? There's two beautiful trades in a single day. You don't have to catch both. You can catch one, no problem. Um, but that's the power of just being able to sit in your hands, wait for the market to develop and build these setups for you. Okay, sit on your hands through those shitty, low probability conditions where you're on the computer and you're like, I don't know what's gonna happen right now. Okay, this is ugly PA. Then you just sit back and you wait. Okay, and then days like this come along, and you're gonna thank yourself for sitting through those shitty days and not taking any trades. All right, but I hope you guys enjoyed this case study. Okay, lots more to come now that the market's been cleaning up recently. But yeah, I'll see you guys in the next one.